Markets are terribly overvalued right now when looking at several indicators. There's no way to deny it. Instead of allowing particular assets to drop in price, they simply provide a crutch. More QE money printing. More super low interest rates. It's all one big giant mess waiting to happen. You came here for the truth, so let me unveil that for you. Today we're going to look at several indicators that are very, very important. I want to begin with this. Net percentage of fund managers saying equities are overvalued. Can you believe this? That we are at a time in which fund managers are actually suggesting the truth. And this goes at the same time that we have this average cash position. Noticing that this declines simultaneously when we were at that peak. Of course, people don't want to keep cash. They don't want to keep investments around that are very low percentage. They simply seek higher returns, and so they take on more risk. This has been an issue forever, where at the peak of any bull market, people get crazy. Looking at this next chart, net percentage of asset allocators reporting overweight in equities. Take a look. Since the financial crisis. Going insane. You can see where it peaked out the previous two instances. And yes, we have gone far beyond it. You need to look at the amount of money, percentage-wise, of their portfolio that they've put into equities right now. Some people have 100% into equities, 0 in real estate. They've shifted out of fixed income and they've put it all into equities. And a lot of people who claim that they have real estate actually have REITs, real estate investment trusts. So essentially, everybody pools their money together and then they can buy bigger places, maybe a shopping mall or maybe a condo complex or something like this. So obviously, you can reap the rewards of having all investors together, but it's not the same. You're talking about paper. You're not talking about real things. And many people would say, well, I cannot afford real estate. A home in my area is $1 million and there's just no way I can afford it. I will have to advise everybody, you're thinking too big. You're thinking too big. Number one, you don't have to buy real estate in the area that you live in. You can do so remotely these days. You can get into all other types of things. This is not the topic for this video. I discussed some of this in my second book. I'm going to be covering it more in the future. I assure you, I promise you. But for the time being, think small. Just remember that. All right? When do you think the equity market will peak? And there are many people here. This is a Bank of America's Global Fund Manager Survey. A lot of them are starting to look at Q2 2018. The darker blue color here is this year. And yes, there's always a greater percentage of people that say, well, not this year, but next year. The same thing that they say with growth. Okay, the growth is not going to be so good now, but next year it's going to be amazing. GDP, yes, it's only 2% now, but you know what? Next year it's going to be 5%. And they just keep you going. It's like they're dangling the carrot in front of your face. Hoping that everything just stays the way it is and they can continue on. Rise in the quantity of money inflates asset and consumer prices. That's what inflation is, but here we go. US M2 relative to GDP in percentage terms. This is going all the way back, into from the 80s. You see what had happened here, but far surpassing what occurred, this marginal deleveraging you can see here, basically nothing. S&P 500 in percentage of GDP, we are heading into that territory once again. Not quite there, but based on the timeline, it won't take very long. US house prices and the CPI. Look at the CPI, how it has increased slowly, steadily. But housing prices, because of the whole subprime issue, because of the ninja loans, adjustable rate mortgages, and interest rates being historically low, this is what you get. You get some serious volatility. This individual here, a big name, right? Mark Mobius. I can see a 30% drop. He's talking about the stock markets. Who launched one of the world's first emerging market funds when consumer confidence is at an all-time high. And by the way, this is a real article. It's out of Market Watch. You're going to hear things that sound like it came straight out of my mouth, but this is him. Okay? When consumer confidence is at an all-time high, as it is in the US, that is not a good sign. The market looks to me to be waiting for a trigger that will cause it to tumble. You can't predict what that event might be. Might be some other issues that they talk about here. This individual predicted the start of the bull market in 2009 and saying that we have ETFs and that's going to exacerbate the issues that are going on today. Okay, ETFs account for nearly 1/2 of all trading in the US stocks. His fear is that ETFs would trigger further drops once the market falls. Of course. ETFs represent so much of the market that they would make matters worse once markets start to tumble. You have computers and algorithms working 24/7, and that would basically create a snowball effect. There is no safety valve to prevent further falls, and that fall would escalate very quickly. Does that not sound like what I say exactly? The snowball effect, the computer algorithms that are taking place every single second of the day, trading all of this, and we just hope that everything continues to do well. But that's not the case. Ultimately, we have to face the music. Economic versus earnings growth projections versus reality. Take a look at where the estimate was going to be back in the dot-com boom. Take a look at the estimates for this financial crisis. And now today, where they expect it to go is significantly higher, going parabolic. Ultimately, we may be left with a different fate than the estimations. They're always going with these estimated trajectories. I don't know. Doesn't ever seem to end up the way that we hoped. Now this right here, I'm just going to scroll very quickly. Looking at these different indexes, median price to sales ratio, okay? But I'm going to go through and it's comparing different charts. Okay, developed market index, heading back into the levels not seen since the dot-com boom. Developed market consumer staples index increased past the previous two bull markets. Developed markets healthcare index surpassing the financial crisis and heading towards dot-com boom. Developed market industrials index, again, surpassing the previous two. Developed markets information technology index looks like it's higher than the financial crisis, but not higher than the dot-com boom. Developed Markets Materials Index, surpassing both previous, and the United States Index, going beyond both. Developed Markets Energy Index, looking right here to be extremely volatile. Obviously, this has increased as of late with oil, for example, rising to levels it hasn't been at in quite some time. So we'll see this one here, how energy does, how it really unfolds over the next few months. I think it's going to be very critical to see if it can, get back to the levels it was before. Will it hit 80, 90, even $100 a barrel? What would happen to the economies around the world if that occurs? So I'm going to end it there. I hope that you found this video informative. I tried to move through it as quickly as possible, get you the information you need, and we just move on. No opinions if I can all help it. Sometimes I start ranting like I am right now, and so I'll just end it there. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel, so I really do appreciate that very much. I appreciate all the comments that you give me, all the support that you give me, and I really enjoy it. I enjoy reading the comments. 95% at least are just positive comments and just great people out there, and I really do appreciate you all. Thank you very much. If you found the video informative, I know that you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. All you have to do is go over to Amazon. There's a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.